I'm Dan Fitzpatrick at Stock and OptionMarketMentor.com on January 28th. That's a Monday. And I want to go back and look at Apple. I talked about Apple recently in our free chart of the day video, so we're going back to the well here. Okay, I described, if I recall correctly, and I think I do, a head and shoulder pattern. You can see it here. Left shoulder, a higher high, which turns out to be the head because it's followed by a lower high, and then finally a break of the, quote, neckline, which is just simply the line that connects this point and this point. Just a straight line. Don't need 3 points to make a trend line when we're looking at a neckline. All we need is an extended line between 2 points. So the idea is the stock breaks below 500. We take the same distance from the neckline to the high here, and we extend that from the neckline, wherever it's broken, to the low. And that's somewhere around like 310, 320, 330, something like that. And that is seen among technicians as a minimum move. That is a measured move. It's just simply the way you trade head and shoulder patterns. But this is really important because actually I'm long Apple, even though I really want to, as I've said repeatedly, short the snot out of it. And it has been right to be short. It is still right to be short if you have this type of time frame. But if you're a trader, you got to look at this. We can expect, as a typical textbook head and shoulder pattern, a retracement that tests the breakout. It should test the breakout, meaning breakdown. It should test this that had been prior support, see if it's resistance. If the stock rolls over, that's when you get short again. So we'll look at the daily chart here. Look at the volume. On Thursday's low here, or Thursday's big gap down, that was the highest volume. Friday, really, really high volume as well, just not quite as high as the previous one. Today, we got a reversal. Gap down a little bit from the open, not too bad, but a little bit. But actually, I noticed it had been trading pre-market a little bit higher. So I got long first thing this morning by some call options. And I'm going to sit there and ride these puppies until the stock gets up to 460, 470. I mean, we've got a gap here that, you know, a lot of traders say, well, that gap needs to be filled. Gaps aren't always filled. Check out all the gaps on Amazon back when it first started trading. If only those things would be filled. But still, we do have a power vacuum right here. We got a void in between these two prices. And so if Apple comes up to test this level again, let's see what that is. The high here, 465. If Apple comes up to test 465, my bet is that's when you're going to see some more selling. You're going to see some selling there. So for another 15 points of upside, I think you want to be long Apple. After that, you know what? I'm not going to be a prognosticator. I'll leave that to other guys that are either a lot smarter or a lot less honest than I am, one of the two. I'm just telling you this. For the next 15 points or so, assuming Apple does move up, I'm going to stay comfortably long, as opposed to the trader Pink Floyd, who tends to be comfortably numb. So we're going to be long here for another 15 points, and then we'll revisit this trade. Oh, and by the way, if the stock doesn't do what Dan says it's going to do, and instead trades down below today's intraday low of 1435.86, which is just slightly higher than Friday's intraday low of 1435. If it starts falling below 1435, you got to zoom out, look at this time frame again, and realize this puppy's going a lot lower. So longer term bias downward, short term bias upward. Let's go make some money.